Hi folks, Nick Shaheen here recapping the week ending July 31st, 2015. Week ended green candles across the board as far as indices are concerned. However, it did end on a sour note. Not so much for the extent of the losses on Friday, but for the potential that didn't develop. Early Friday started with a rip higher by the indices, erasing a -6 point on the SPX, going to plus 5 points or so. So like a 10-point run-up based on one report, which was the ECI for employment cost index, came lowest in history, I believe, on record at least. And the bulls took some notion out of it that Yellen would delay the interest rate hike. So everything associated with that happened, including the run-up. The small caps were even plus 1%, and the dollar went down. Interest rate crashed, minus 3% or so. Bonds rallied. So it was all based on hopium. There was no change in the theory. The thesis is still the same. Rates are rising, whether this month, next month, the month after. They're rising sooner rather than later. But hopium from the bulls caused them to run up. And the fact that they couldn't hold it up there is where the disappointment came that I'm talking about. So the observation is that I wanted to take out of this exercise is as follows. Let me zoom out to it. This is the run-up. You can see it. That is the S&P ES. If you want to see it corresponding move in Apple, it would see it here. And the NASDAQ, you would see it here. See that little party hat? And let's see if we saw the small caps. We'll talk about that a little bit later. But you can see this, I'm going to interpret in plain, simple English. Nothing is priced in with regards to rate hikes. You think it's priced in, it's not. When the rate hikes happen or will get announced, we will move, okay? So nothing is priced in. Point number two, there still is plenty of fear of the rate hikes. You hear a lot of experts say, it's not a big deal, markets will shrug it off. Not at first. There's still a lot of fear. So it tells me that markets will go down when the rate hike happens. This is pricing out fear. This rip is pricing out fear. This is like, wait a minute, we overdid it. They tried again, and then they faded. So this is where the disappointment comes. But from the disappointment, I come out with an idea for myself in order to trade going forward. Overall, in the last couple of weeks, we've had some disappointment. We've had, first of all, run-ups to all-time highs, especially in right here. 2 weeks ago in the NASDAQ. This is the NASDAQ. These are the S&P. These are weekly candles based on mega cap reporting. So, but the rises were on bad breath, meaning we look at the heat map and you'll see a couple of candles, a couple of big boxes moving the whole market. Like these two boxes, Chevron and Exxon, that's the opposite, going down 5%. That pulls down the Dow. It shows the Dow worse than it is. And in Amgen being up 3%, props the Dow up. So we had mega moves in Google, also in LinkedIn, and we had other, a drag from Apple on its report. So in the last, back to charts, couple of weeks we had, run-ups based on that. And if people chased these baseless run-ups, the reason I say they're baseless, not because they're not deserved, they're mathematically deserved, but they're not based on a change in thesis. So you don't chase the index, you chase the names that are worthy of chasing. If Netflix reported a huge future for it, don't chase the index, chase Netflix. And conversely, try to catch the falling knives that are worthy of catching. Some are not, like LinkedIn, because there is a potential more downside. Apple on a hammer, I'd be brave enough to catch it. Facebook on a hammer, I'd be brave enough to catch it. Just speaking in general terms. So don't chase run-ups that have bad breath. That's the point I'm trying to make here. So how do I trade? If I'm long, I book longs and I re-engage cheaper. How? If I own a stock or the index and it's running up, I book the thousands that I have in profit, and I turn around and I do an option strategy via debit call spread or straight up calls or call calendars. This way, if I book too early, I'm still participating, but now I have a very limited money on the line with a lot of potential, and I'm playing with the house's money. If I'm short, I book the profits when they become cheap because I sell spreads, and I also re-engage with what's working. So if I'm shorting the SPX and it's working, I continue shorting it. And when it gets hammered and I can see that it's undue hammer, undue selling, or overselling, then I go long it via credit put spread. So you have to trade the ranges. The ranges are holding up. You can see that box. I haven't extended it, but it's holding up. The only problem is that the swings are getting wilder. So if we break out or break down from this range, the move can be violent. So make room for that. Same with the small caps. Look, we've been here. Okay, so leave room. If you're fast trader, you can still do weeklies. I'm staying out of them just because they're more headache than they're worth. I can achieve the same percentage, if not better, while sleeping better by going out at least 1 week, 2, 3, a month, or 2 or 3. It depends on your strategy. I don't chase. I don't panic. And I'm always cautious, meaning I always leave room for error. In general, the weekly candles were green. We can say that. But we still have lower lows and lower highs, so we need to see the next week's candle. They have their work cut out, but I think they're going to need a reason in order to run. We can't just keep running on relief pops, relief that China didn't fall apart, relief that the Fed didn't hike rate this month, relief, and they didn't tell us that they're going to hike rates in September. And maybe on Monday, relief that the stock market in Greece opened with no debacle. I don't know. I'm forecasting. They say they were going to open it. So all these relief rallies, and they're usually shortable, but I give them some time to play out a little bit sometimes. All right, so this is just the overall theme that I'm going with, my perception of where the markets are running. Now you have to pay attention to rates. I usually look at the 10-year, which is a lot of people what they look at. Some disappointment, especially today, but it's coming up on this area here. This is a tested area. This green trend line was resistance and then broke out of it and served as support 2 times, 3 times. This is the 4th time. If it doesn't hold, we could fall to here. If it holds and we bounce, we could find ourselves retesting this level from which we can finally break out to this target that I've had for a while. But although the target might be damaged, technically speaking, but rates are rising, makes sense. All right, so keep that in mind as well. There are a few big names that I, don't catch a falling knife. I know Exxon is a quality name. However, the 5-year scares me a little bit, so I want to be cautious. If it loses this level, look how important this level is. This is 5 years worth of data. Resistance, resistance, finally broke out. Support, support, support. You can argue that these are all supported. Boom, what now? If they lose it, bulls are tired. They may overshoot. They already hit my target, the top of my target. They may overshoot and come to the eyeball bottom. So 75 is still very likely. It's a possible scenario. I am not calling for it, but I want to caution you against this. That's Exxon. It was down almost 5% on Friday. Chevron, same story. It hit my target, and I still have another target if it loses this area, and it looks like it has been. I mean, this is consistent selling on consistent volume, if not increasing. So be very cautious. And they lost this line. This is a more likely scenario, although it's a very cheap price, one would argue, but it could always get cheaper. The war on oil just rekindled this week, folks. OPEC/Saudi Arabia is gearing up to continue this fight longer against the Western oil supplies, and the U.S. delivered by more rhetoric, saying that they're going to open up the exports. Keep that in mind as well. All right, folks, if you have any questions, I'm signing out. Let me know. I answer all questions promptly.